Have you ever felt like accounting is just this impossible mountain of rules you have to memorize? Like you're just one wrong journal entry away from messing everything up? Well, what if I told you there's a better way? Today, we are going to pull back the curtain and show you the simple, powerful logic that makes it all click. Okay, let's just dive right into the core frustration, right? For so many of us, whether you're a student or a professional, accounting feels like something you just have to cram for. You brute force it with memorization just to pass a test, and then you forget it all a week later. But it really doesn't have to be that way. So, this is the big question we're tackling. Is accounting really about mindlessly memorizing which account gets a debit and which one gets a credit? Or is there a deeper, way more intuitive logic that, once you get it, makes everything else just fall into place? And hey, if you've ever felt confused, you are definitely not alone. I mean, look at this quote. It highlights a massive problem. The old way of teaching accounting, it often just fails. Even people with degrees can be left scratching their heads over the most basic concepts. But here's the thing, it's not your fault, it's the approach. So you want to know the secret? It's not some long, complicated list of rules, no. Instead, there is one single foundational idea that unlocks the entire system of accounting. You get this one thing, and I promise you, everything else becomes so much clearer. And here it is. This is probably the most important concept in all of accounting. A business is its own person. Seriously, it's a separate entity totally independent from the people who own it. So the company's money is not the owner's money. That one simple idea is the bedrock for everything we're about to do. And that idea of separation, it's captured perfectly in this little equation. Now, don't think of this as a math formula. It's really just a logical statement from the company's point of view. All it's saying is that everything the company owns, its assets, had to come from somewhere, right? It was either funded by outsiders, like a bank, those are the liabilities, or it was funded by the owners themselves, and that's the equity. It has to balance, always. All right, so how does this simple little equation help us finally crack the code of debit and credit? I want you to forget every confusing definition you've ever heard. This equation is literally all we need to make it click. Think about the accounting equation like a simple story of sources and uses. The right side of the equation, the liabilities and equity, that tells us where the money came from. Those are the sources of the funds. And the left side, the assets, that tells us what the company did with that money. Those are the uses of the funds. That's it. Sources always equals uses. Okay, now I know what you're thinking. A table, this looks intimidating, right? But stick with me, because it flows directly from what we just said. In the world of accounting, debit just means left side, and credit just means right side. That's it. So since assets are on the left side of our equation, their normal state is a debit. And since liabilities and equity are on the right side, their normal state is a credit. And expenses and revenue? Well, think about it. Expenses are a use of funds just like buying an asset, so they act like they're on the left side. They're debits. And revenue? That's a source of funds that makes the owner's equity bigger, so it acts like it's on the right side. It's a credit. See? It's all just logic. Absolutely no memorization needed. Okay, theory is over. We have the logic. Now for the fun part. Let's see how this really elegant system works with a super simple everyday transaction. This is where the light bulb really goes on. So, let's walk through this. The company's expenses went up. And since expenses are a use of funds, an increase is a debit. Simple. At the same exact time, the company's cash went down. Now, cash is an asset, which is also a use of funds, so its normal state is a debit, but since it decreased, we do the opposite. We credit it. And would you look at that? Debit 100, credit 100. It's perfectly balanced, every single time. Now, that single entry we just made isn't just floating out there by itself. It's actually the very first step in a bigger, systematic process called the accounting cycle, which you can see mapped out here. Every single transaction gets recorded and organized, all leading towards a final summary. And this right here, this is the goal of the whole process. After we record all our debits and credits for a period, we put them all together into a trial balance. It's basically a master list. And if we did our job right, the total of all the debit columns will perfectly equal the total of all the credit columns. It's the ultimate proof that our system is in balance. So, we have this beautifully logical, balanced system. It's elegant, right? But why? Why do we go through all this trouble? What's the point? Why does all this structure and balance actually matter in the real world? This is why it matters. Because this reliable, balanced information, it's the language of business.
Owners use it to see if they're actually making money. Management uses it to make smart decisions. Investors and banks use it to decide if a company is a safe bet. It is the absolute foundation of trust in our economy. So there you have it. We've seen that accounting isn't some scary monster of memorization. It's actually a powerful, logical system for telling the financial story of a business. And now you have the key. You understand the logic. So the only question left is, what stories are you going to find hidden in the numbers?